Hey, what's up guys? Hope everyone's good. So welcome to my first YouTube video. So I've been wanting to start a finance/investing channel because I love this stuff and I keep reading about it and talking about it every single day and I'm addicted to this. So why not make a channel and share my passion? So yeah, if you guys are into this, just support me, like, subscribe, leave me a comment for ideas or whatever. So yeah, let's get into this. So today we're going to talk about SDTY. So I'm not sure how I'm going to title this video, but let's say we're going to look into this and see, is it possible to retire off this or live off the distributions from this ETF, or is it even a viable investment, right? So today is February 21st and we got the first distribution from SDTY. Personally, I do not hold any of this for now. I'm just looking into it. So hopefully this video could give some information to people like me where you're curious about it, but you're not too sure yet. We don't have enough data yet. But basically what I did is I took today's distribution and I annualized everything to kind of forecast and see if we can live off this and how much we could make in the future, whatever. So this is basically a S&P 500 covered call ETF. But what's special about this is they do 0 day to expiration options. So this means that if I understand well, because I'm not the best into options, but basically they sell options every single day. So they basically generate income on a daily basis. This means that technically they have income, they have disposable income from their option moves on a daily basis. So to end, what I'm trying to say is that since they have income on a daily basis, they're able to pay investors on a weekly basis. So this is a weekly S&P 500 kind of covered called ETF, and it's a direct competition to Roundhill's XDTE. If you're into the income game, you probably know XDTE already. If you're not, you should look into it. It's very good. Their price has been pretty flat and their distribution very consistent. They used, at inception, they were more around the 15% for what I remember. But recently they've been in the 20% and they had a flat capital or slightly increasing when the market is growing. So yeah, this is a direct competition for XDTE. So we'll see what YieldMax does with this and their performance. But yeah, let's get into the numbers. So like I said, I annualized everything. I know we do not have a lot of data, but just based on today's distribution and the data we have since inception, just for fun, let's see what we can get as a forecast. So I wrote here that the price at inception was 50 and 36 cents. We got a distribution today of 22 cents. Today's opening price was 50 and 19 cents. So today's distribution is basically a weekly yield of 44.44%. If you annualize this, so you do this times 52 weeks per year, you get 23%. So today's distribution annualized on the annualized yield, it's 23%. Now, for the return on only the price, we're down 17 cents since inception, which is minus 0.34%. And then the total return, which is how much we're up or down on price return plus how much we got paid per share. So we're up 5 cents since our per share since inception, and this means that we're up 0.1% for the week. And then if we annualize this return, we could assume that if price keeps doing this, we would make we would be up 5.38% on the year, basically without investing back or dividends, or like without investment, without dripping. Basically we would, let's just say, would be like around 5% a year on returns. And if we compare this to the S&P 500 from Vanguard, this one is up 0.68% in total return if we annualize since the same date as inception of SDTY. So this would be an annualized return of 35% if we keep that trend. But yeah, this is just a week of data, so these numbers are really not accurate, but it's just for an estimate and just to have a comparison, since this one is a covered called ETF on the S&P and this is the actual S&P. So you would have been better off just holding this. But the point of SDTY is not to beat the S&P, is to generate income and basically reinvest in other stuff or live off of it or use it to pay a few bills, reinvest the rest, whatever you want to do, right? So now let's look at the numbers. So can you retire off this? So let's say you would invested 10K and you do not contribute, so you just drip everything with a weekly distribution. Let's assume the price goes up 5% a year, let's be conservative. Let's assume the price only goes up 2% a year, and the distribution also goes up. So we hold the 23%. Basically, wherever the price is going, the distribution goes up. So your yield on cost will go up, but the yield will stay at 23% no matter what the price is. So let's say we put 10K down for 23% dividend yield for 10 years, and we drip. So at the end of those 10 years, without investing a single dollar of your own income, you would be at 114K. Where is this? You would be at 116K. And you'd have a annual dividend of 29K. So 30, let's just say 30,000. So you would be at 2,500 a month, which is pretty good. You can't really retire off this, but you can be semi-retired, and you can use this, definitely use this to pay your bills or contribute to other more like stable funds in your portfolio. Now, let's say you only invest $1,000 a month from that 10K starting point. So that would be $12,000 annually for 10 years, same stats, everything. You would be ending at $575,000, and you would have a dividend yield of 150K basically in 10 years, while you only invested $1,000 a month. So yeah, these are numbers that you could retire off. You can definitely retire off of this fund if you contribute to it on a monthly basis, and if the performance stay as they are this week. We do not know that for sure because it's a brand new ETF, so it might go underwater, or YieldMax might do some adjustments like they did in 2024, where they had so much NAV erosion that people started getting mad at it. So they basically switched their strategies and everything, and then their funds started really performing well. So yeah, we don't know how the performance will be. Maybe 23% was just because they had volatility recently, because Trump keeps changing tariffs, whatever, it always affecting the market. So the S&P has been pretty volatile recently, but maybe if the market calms down, we'll be at a 15% yield. We do not know if that 23% yield would hold off. But just based on this week's data, I would put a stamp and say that yes, you can retire off of this. And I think that a 10K starting position is not a bad idea, and investing $1,000 a month, if you can, in this fund is not too aggressive. So let's say you invest 4 or 5K per month. If you can only just dip $1,000 into this, for example, or XDTE, I think it would be a good idea. And over time, it would be more stable than investing in something like Ulti or single stocks, because this is the whole S&P. So I think this is a pretty good investment, but the data is too young, so we don't really know what's going to happen. But based on the numbers, you can definitely retire off this. That's for fun. Let's say you decide to invest 2K a month, so 24,000 a year. So as you can see here, you'd be at $1 million at the end of those 10 years. So this is pretty cool. And you would have, how much dividends would you make? You would be making $266,000 in dividends. So this is pretty crazy. Assuming the price is stable, assuming the underlying is stable, assuming the S&P doesn't have a bad year. Even if the S&P has a bad year, I think it would dip. But if you keep buying during the dip, you would average down. And then when S&P recovers and keeps going up, you would probably be in a winning situation, because if you look at the overall data for the S&P, you know that it has more green years than red years. So even when the S&P is down, don't panic and DCA basically. But yeah, also the yield today is pretty high at 23%, because if we look here at the data today, it's pretty crazy. I think Trump just spoke about some tariff stuff, and as you can see, the whole market is red today. So yeah, since price opened a bit down, it kind of boosted the yield a bit, but we can say it's around 22-23%, right? Yeah, so to conclude, yes, you can retire off of this after maybe after a few years of consistently investing into it. Would I invest into it? No, I'm still going to wait for data. For me, currently right now, if I had to invest in this, I would invest in XDTE because we have the data. It's been performing well. It's been stable. Distribution has been very good. And also what's nice about Roundhill is that at the end of the year, all their excess dividends that they didn't pay during the year, they pay it to their investors. So if you remember in 2024, if you want to go look at the distributions, they paid huge distributions at the end of the year because all their overhead cash that they kept, they paid it off because they're probably not allowed to hold it to them for them. So yeah, thanks for watching the video. I'll be making more videos on these YieldMax funds and all these income funds because I freaking love them and I'm an income investor myself, and I'll probably make videos about my own portfolio and stuff. So yeah, hope you guys like this video, and until next time, take care guys.